on me right now, but if I'm flexible enough, let's see. You might have seen some red pants there. I don't know if I can get them up high enough, but I am wearing red today. I was at a business meeting this morning, about 20 minutes from our office. I had to wear a bit nicer shirt, and I'm missing my Red Friday T-shirt here at Low VA Rights, but I wore red either way in my pants. But that doesn't change the fact that it's an amazing Friday. We're glad you guys are watching. We're going to talk today about self-employed income on VA loans, okay? Now, what I'm going to talk about is pretty typical for FHA, conventional, and any other type of financing that you might be getting. We always focus most of our conversations to veterans, but keep in mind, if you're watching this because you're a loved one or a family member or a friend of a veteran, or you just stumbled across our site, we can help all of you, okay? One other thing I want to make clear, if you're watching this any other day other than today, of course it's not Friday, likely when you're watching it. We had someone make a comment on YouTube where we host a lot of these videos, and he said, LOL, it's not even Friday and this isn't even live. Well, you know what? We are live right now, but we will post this where you guys can go and listen to it over and over again and get some good information out of it. So we have not had questions either asked us live in months. So if you've got questions about self-employed income, please stay with us for the duration of this video. It's maybe going to go 3 more minutes. I'd love to answer some live questions right here live online today. So first of all, self-employed. Probably the most important thing you're going to need is a 2-year history. Okay? So what that means is, let's say last year you were a wage earner, someone making W-2 income, or you were just receiving VA disability or some other sort of fixed income, and you got the entrepreneurial itch. You've been watching Shark Tank, and you now want to go start your own business. So sometime in the last 12 to 18 months, you started your own business. You're making way more money. You're loving life. It's awesome to be in America where you can go out and start your own business and you're feeling great. You're still not going to get a VA loan with that self-employed income because you have to have been self-employed for a full 2 years. And we've had people say, well, look, I was a car salesman making money, being paid W-2, and now I've gone and I've started my own car business, so it's the same. I've been in the same line of work for 2 years. That doesn't matter. You have to have 2 consecutive years of self-employed income. Okay, now, one other thing that I would suggest, let's say on year 1, let's just say you made $100,000. You had a killer year. First year out of the gates. Year 2, let's say you made $70,000. Okay, that's a 30% drop in your income. If you have a 25% decrease in your income from one year to the next, just be prepared. Generally speaking, instead of averaging the 2, you're going to likely be required to only claim the income in year 2 because something's happened here. Why is your income declining? So you need to be careful if you've seen a 25% decline in your self-employed income from one year to the other. But let's assume all is well. You actually made a little bit more. Okay, you made $105,000 the second year. You add those 2 up, you divide by 24, and that's your average monthly income that you're going to be able to use on your loan application. That's how that works. Keep in mind, you're going to be asked for a lot of additional documentation when you get a VA loan as a self-employed veteran. Tax returns, letters from your CPA, profit and loss statements. There's some risk for us, the lender, or any other lender you're going through. When you're out on your own, there's reward, but where there's a higher reward, there's also a higher risk. So underwriters are going to want additional documentation. Please don't get frustrated. Our self-employed borrowers, sometimes they get frustrated because they're like, I already sent you my tax returns. Why does my CPA need to write this letter? It's just part of the process if you're a self-employed borrower. So I want you to know up front, and I want you to be prepared, there will be some additional paperwork. Lastly, don't know where my eraser is today, but it doesn't really matter. Lastly, another thing that we've seen happening a lot with self-employed borrowers, thank you, Kristen, I got my eraser. Another thing we've seen happening a lot with self-employed borrowers is they make a killer amount of money, gross income. Their revenue's great, but back to this amazing country we live in, we also have the ability to use the tax code to our advantage if we are business owners. And if you're writing off all of these expenses and you're depreciating all these assets, and all of a sudden you're like, hey, I made 100 grand last year, but you guys are only saying I made 40,000. Well, you're going to look at your adjusted taxable income on your tax return. So on one hand, it's great to be self-employed because there's a lot of write-offs and opportunity. It could make it more difficult for you to get a VA loan. We're going to finish up here, so if there are questions, I'm going to answer them. We got some questions. Let's just go to the questions so that people stick around.
What is a CPA?
Oh, sorry, CPA. I think 2 or 3 weeks ago we did an acronym training with different mortgage terms and acronyms. CPA is a certified public accountant. Okay, I could have also said your accountant, your bookkeeper, but a lot of times the underwriter is going to ask that your accountant, whoever's doing your taxes, if you're using one, which most self-employed borrowers do, taxes become much more intricate when you own a business. Certified public accountant. Great question. Any other questions? Okay, so in summary here and closing up, keep in mind you can add back into your income. I talked about the ability to write all this stuff off. You can add back in depreciation, miles for travel, miles driven, and meals and entertainment. So there are certain things that you've written off to lower your tax burden that you can add back in and up your income. So at the end of the day, thank you to all those hardworking self-employed people out there. We love small business owners and self-employed borrowers. You're what make this country great, especially our veteran self-employed, our veterans that own businesses or self-employed. Thank you for the risks you take in making this country so much better. This is Eric. Please wear red on Fridays, and we hope to help you on your next loan.